Buy-to-let in the UK is dead easy, right? Buy a flat, get tenants, retire early. Yes, that is if you ignore tax law, void periods, interest rates, and the fact your letting agent probably knows more about your margins than you do. Today, I'm walking you through the ugly truth about UK buy-to-let and how to do it properly, from the perspective of someone who's both an accountant and a landlord. If you're new here, hi, I'm Red, an accountant, finance specialist, and a property investor. I make real-world videos about business and money. I've bought a home, a rental flat, and even a crumbling wreck at auction, so I've seen both the spreadsheets and the stress. Buy-to-let is often sold as a passive income stream. But let's be honest, it's passive in the same way parenting a toddler is passive. Unless you have managing agents and a fat buffer fund, expect emails at 10 p.m. about broken boilers and Wi-Fi drama. Even with agents, you are the business owner. The lesson here is build in time and cash flow and margins for drama. There is a difference between being a landlord and being a property investor. So you kind of have to decide at the beginning which one you want to be. Because if you're a landlord, you're literally in charge of everything. And I'm talking the legal side of getting a tenant and managing all the utilities and making sure that your tenant is looking after everything properly. Taking care of your tenants is pretty much a full-time job. If you're an investor, you outsource that care to managing agents, and it saves you a lot of time, but that doesn't mean that there is literally no time spent on managing the tenants or your properties. So make sure that this cost is included in your initial calculation and don't expect to just hand it off and never hear from the flat ever again. That being said, if you work part-time or if you simply have the time and interest in taking care of the flat and the tenant on a regular basis, you will save yourself some money. This is what we call a cost versus benefit analysis, and I can help you do this for your own specific case. Here's the maths most people skip. Let's say you're renting a flat for £1,000 a month. After mortgage, insurance, service charge, repairs, agent fees and tax, you might clear £250 on a good month. So no, it's not instant wealth, it's a long-term strategy. And tax will eat you alive if you don't structure it right. There are some benefits of running your rental income as a business, but you need to make sure that you understand all the responsibilities that you have as a business owner. Yes, you can claim some business expenses that will lower your tax. However, you need to educate yourself on what's actually claimable and what's not, and what level of tax you pay. You want to incorporate some tax-efficient strategies, not tax avoidance or evasion, or simply not declaring it. We're talking about reducing your tax liability in a legal way. Yes and no. It's like asking if you need a pizza oven to make a pizza. An Italian will tell you definitely yes if you want a proper pizza. It's the same scenario when you ask an accountant whether you need an accountant when you start a new business venture or get a rental flat. This is how you avoid overpaying taxes or getting into trouble for not doing things properly. For example, you can claim your mortgage interest as a deduction, right? Nope, not unless you're buying through a company, which you didn't because you Googled for 20 minutes and then you just winged it. It's a nasty reality check when you check your spreadsheet and it says you made £6,000 profit, but unfortunately you only have £2,000 in your bank, and that's before you have to pay your tax bill. Here's what actually works. It's not sexy, but it's sustainable. Run it through a limited company if it makes financial sense. We'll do another video on that later. Plan for void periods, 6 weeks minimum per year. Budget for 20% maintenance, even in a new flat. And don't stretch yourself. Stress-free investing beats flashy any day. Quick real example, my personal story. I own a rental flat. It does fine, but only because I didn't lie to myself on the spreadsheet. I ran the numbers assuming 2 months vacancy, annual repairs, tax at 20% and zero capital growth. And you know what? It still worked. Because the goal wasn't get rich quick, it was build something slow and calm that pays me quietly every month as well as in 10 years' time. Buy-to-let can still work, but only if you treat it like a business, not a TikTok side hustle. If you want real, grounded help with your property finances, I'd love to help. Links below to book a call and hit subscribe if you want honest advice without the BS.